Hey everyone, and welcome back to another video in my series of funding blockchain projects. In a previous two videos, I was talking about how to raise money for your project, and in this one, I will be talking a little bit around incorporation and setting up your entity. In the previous video, I said I'm not a financial advisor, I'm also not a legal advisor or a lawyer or anything like this, so I don't provide legal advice, and I suggest that you find some proper lawyers and you get yourself some proper legal advice if you want to set up an entity. Let's move on. Just to remind you where we are, I see fundraising as three rounds, basically, three phases, let's say phases. The first is where you got your founder money and your grant money. Then in the second phase, you're trying to raise money from private investors. And then the third is when you do a public round. You don't have to do all of these. This is just an example of how you can do it. What I'm talking about here is not raising money, because we've covered that, but a little bit around the operational side, which is actually really important and it's worth trying to get it right. So just to remind you, the previous video was about investors. It was about how to structure the rounds, how to make it look attractive to investors, a little bit about finding them, and the pitch deck. In this video, I want to talk a little bit about the legal entity, a little bit about intellectual property, and a little bit about banking. This here is the process that you'll be following. You will find your jurisdiction, let's say it's like Switzerland, and then you will choose your lawyer. Of course, this is the ideal sense. What will probably happen is that a friend that you know within the industry will recommend a lawyer to you, or one of your investors that you've already found, because you may have found an investor, even though you haven't signed anything. They might say, okay, we want to work with you. We want to invest in your team. Oh, I know a good lawyer. He's over here. And then they will suggest which jurisdiction on the back of finding a good lawyer. That has often happened more so than the other way around. This is like the theoretical process. So those two about the same time. You're going to then incorporate your company or establish your foundation, whatever it is. You also need to get some sort of agreement to sell the tokens. It's got to be a little bit more complicated, shall we say, a little bit more detailed than a SAFT. I'm seeing lawyers, at least the ones that I've spoken to, basically push back on the idea of a SAFT. They don't like them so much anymore. And part of that's just like around US regulation. Now, I'm saying this is things that I've heard with conversations that I've had, like personally had with lawyers, and from what I hear from friends. I can't tell you that that's going to be completely true for your case. Just something to watch out for. If you go to do a public sale, then at some point you will need to apply to the regulator within the company where your token sale entity is. If you're in Switzerland, then you'll apply to FINMA, but the lawyers will help you do that, and they will probably want to check your white paper before you send it to FINMA. They want to know, as best as I can tell, that you're not going to be breaking any laws, say within Switzerland, with your idea. And they probably want some idea that you're not like a complete scam team. I think if they had some real worries, they would try to just weed that out as fast as possible. So there is some process there. It does take some time, and there is some cost for the lawyers to spend this time checking your white paper. It's part of the process if you want to do a public sale. And it's not a bad thing, you know. In the overall grand scheme of things, it's not that expensive. It only sounds expensive because me and you were not used to paying for things which cost, say, tens of thousands of dollars. Something to bear in mind. Lastly, in the process, you should be getting a bank account set up. This is expensive, so I also say postpone that as long as possible, and I'll explain why later. When you're incorporating or establishing, setting up, whatever you want to call it, you're probably going to have entities in different jurisdictions. You probably have an entity with your builders, which might be in a cheap country for builders like Germany, or maybe it's in the UK or whatever. And then on the other side, you'll have another entity which is in a different jurisdiction, which maybe it's a low tax jurisdiction, and that would be good for, say, doing a token sale. You're probably going to need lawyers in both countries to help you set up these entities and to figure out what the legal relationships should be between each of these entities. Here I'm providing some examples of teams that I'm friendly with, and this is sort of information that you can find publicly. The only one I wasn't sure about was Akala. I think they have a foundation in Singapore, but the foundation model is very popular, but it's not the only choice. You can also choose like an association in Switzerland, or you can be a private company. There isn't necessarily a right and wrong The Hopper Association, they're trying to do something interesting with DAOs, so maybe the association is best from that perspective. It's something to consider. I can't give you the right answer. I'm only making these as suggestions, something for you to do a little bit more homework on, and of course, go speak to a lawyer. Let me push on, being quite fast here, talk a little bit about intellectual property, at least from this naive level that I understand it and from teams that I speak to. This is actually on the back of a real example from a friendly team where they wanted to set up a Swiss entity, but the lawyers were giving them a little bit of caution around where the IP is owned. In the first example that I have on my slide here, this is like a theoretical example where you try to conduct a token sale in Switzerland, but you don't have any employees there and you don't even have an office there. And to make it worse, your intellectual property is owned by a German entity, or people even just residing in Germany. The government in Germany may try to tax the proceeds from the sale of your token. Basically, you are, in this example, you would have no way to prove that you have any real relation to Switzerland or no real sort of economic substance. And that's what it comes down to at the end of the day. Whereas what you could do is you could put your intellectual property within a Swiss entity. You could have an office there with a rental agreement, and you could have employees there such that you do have some sort of substantial presence, shall we say. That should, again, no guarantees, give some protection against the German tax authority, who will probably hit you with a higher tax. Now, as I've said before, I'm not a lawyer, so I'm really trying to be cautious here and saying this is not necessarily the way that you should do it. This is just a way that I have seen it being done, and these are problems that I've heard about. That intellectual property can be a headache, and you may get taxed on it if it sits within the wrong jurisdiction, shall we say. Whenever you're going to be sending payments from, say, the Swiss to the German entity, you also have to be aware of the cost at which the services are charged at, and this is the transfer pricing that I mentioned on the slides. Basically, the way that you should price the service is as if though the two companies don't know each other and they're completely separate owners, etc. And therefore the price that they would naturally agree upon would be some sort of market rate. That's this idea of arm's length. Again, worth getting some advice on that. Let me push on here again. Banking. So banking is a little bit painful for crypto in general. For personal accounts, you can use, for example, Revolut. I think you struggle with TransferWise. Silvergate, I don't know so much. It's more of a US company. UBS and Credit Suisse work, at least if you're a resident within Switzerland, for example, and you want to, say, send money to Coinbase. That's all fine as a private person. As a crypto entity, places like UBS and Credit Suisse will block you. They may even shut down your account because they don't want anything to do with you. That's just kind of the nature of it. That's kind of the way it is. They're a little bit afraid of the risks around crypto and raising money. This is kind of unfortunate, but it is the way it is. But there are potential solutions, and this is what I'm just trying to kind of suggest to you, that be aware of this. It will be a headache, but there are some solutions, but they're not perfect. The solutions are to look at private banks. The banks here will take you on as long as you're not some sort of, dodgy customer. As long as you're above board and you're doing everything in the right way, then they say, fine, you can have a bank account and you can sell your crypto on, say, Coinbase or whatever it is that you do it, Binance, and then bring the money from there to one of these banks and basically cash it out. They're happy to do that, but they are expensive. So expect sort of tens of thousands of dollars per year to run the account. Does that sound expensive? I'm sure that it does, just for a banking service. But then at the same time, it is more of a guarantee that you can get a bank account. And if you need to be making fiat payments and you need to use the banking system, then you will need some sort of account, and they provide a solution. I know you're probably thinking, damn, that's expensive. Not much I can do to help there. It is what it is. They can offer other services like investment of your funds. They will, or they should, provide a much better service than a regular bank, because they don't do the scale. They are at the low end of the scaling of the scale, where they don't have many customers and therefore expensive. I say try to put it off for as long as you can. One thing you could consider is that of going the stablecoin route. If you can pay your staff in stablecoins for as long as possible, then that's probably easier for everyone. They can cash it out much easier than an entity can. And obviously with it being a stable value, then you don't have the same sort of headache as it would be just paying like normal crypto. I think that's a good solution. At some point, maybe the staff don't like that. It'd be great if they did, but maybe they don't. And at some point you may have to pay some sort of bill in fiat. I don't know. It's like the office that you're renting, the rental agreement is probably in fiat and they probably don't accept stable coins. So you're going to need a bank account at some point if you want that sort of presence. So this is kind of the trade-offs that you need to be thinking about and trying to plan for. Not much more I can say in that. It is just one of these things. It is a bit of a headache, but it is what it is. Here, this is my last slide, which is just to say that I'm running this community called Polkadot Market. Most of the information that I've given is not specific to Polkadot at all, but this is where I'm mostly active. This is the community that I run. We have a Discord, we have a Reddit. Most of it is talking about the price action of Polkadot and the various parachains, including Kusama, of course. And we talk a little bit about the economics, or we might talk a bit about even like global economics, or we even talk about like the various fundraisers that have happened. That's where we are. We're about 6,000 members now in Reddit. Obviously, you're very welcome to come and join us there. I hope you've enjoyed this video and I will see you in the next one. Thank you very much for watching.